Hello, everyone. Welcome to lesson number 2.
In this lesson, we will be covering the basics of stock market charts. Before we learn how to read a stock market chart, let's learn what it is.
What is a stock market chart? A stock market chart is a graph that represents the price of a company's share price as time goes on.
So we're going to be looking at two different types of stock market charts. In the first, on the left, we have a line chart, and on the right, we have a candlestick chart. For the line chart, this graph represents the stock price with a line and is preferred when looking at longer periods of a company's price history due to its simplicity. On the right, our candlestick chart, and this graph is represented with connecting candlesticks. They all represent equal time frames, which give more details about the price movement in a certain time period. And this is preferred when looking at smaller periods of a company's price history. So first, we're going to be discussing a line chart, and this here above is Tesla's line chart. So what is a line chart? A line chart has a stock price or trading volume information on the y-axis, and on the x-axis, it has the time period. When a chart does have a trading volume, it refers to the number of stocks a company bought and sold in the market on a particular day, though not all charts will have a trading volume. And the closing stock price is commonly used for the construction of a line chart. You take a particular date and plot the closing stock price on the date of the graph. You put a dot on the chart above the concerned date and alongside the price to make the chart.
Another commonly used stock market chart is called the candlestick chart. This stock market chart is made by connecting many candlesticks amongst each other to create the overall chart. Each candlestick is supposed to represent the same time frame and varies based on the overall time frame. Usually, if it's above a month, then each candlestick will represent a day's worth of time. However, if it's smaller than that, it can vary based on the chart. So there's two types of candlesticks being used in any candlestick chart. There's the bullish candlestick chart, which is represented by green here, and then there's the bearish candlestick chart, which is represented by red. So if you're reading a bullish candlestick, the bottom is where it opens during the trading day, and the top here is where it closes, which signifies an increase in price change from the trading day. The top tick right here is the highest price it was during that same trading day, and the bottom tick here is the lowest price it was during the trading day. Now, for a bearish candlestick chart, just like the bullish candlestick chart, the top here is the highest price it was during the trading day, and the bottom tick here was the lowest price it was during the trading day. However, the difference between a bearish candle and a bullish candle is the top of the candle here is where it opens, and the bottom is where it closes, which represents a decrease in share price from the start to the end of the trading day. These candlestick charts are mainly used for smaller periods of time, as previously said, because you can see more detail between each period of day. So using charts for trends, we have 3 different time periods of stock market charts shown here of ExxonMobil. We have the daily chart on the left, we have the monthly chart in the middle, and then we have the year chart on the right. So you can use the stock market chart to see how a company is trending over different periods of time. Like as we can see on the right, over the year that it's been in an overall upward trend. Even though there's been many dips, as we can see here in the price, it overall tends to trend upward. Whereas in the past month, it differs from the year as it had dips and upwards. It's been more in the neutral. And on the left, it simply just shows the price of the daily chart.
And just to summarize, we've analyzed a company's price chart is important and it has many different uses, including revealing a company's overall price trend. Different types of charts can help in different ways. For example, the candlesticks and the line charts we just discussed. We can reveal a company's volatility, which is basically how it varies. And you can analyze a company for patterns and utilize them. We didn't cover specific patterns in this video, but we hope to get to that in the next video.
Although there are many different types of stock market charts, the candlestick and the line are the 2 most commonly used.
Thank you.
Have a nice day.